Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant. With me, my colleague Surabhi, and Nigel is back from a short trip. Guys, good morning.
Hi, morning.
Good morning. Welcome back, Nigel. Good to have you back.
And
yeah, absolutely. From the Golden Temple, right?
Absolutely.
Yeah,
Amritsar, beautiful. I love that city, you know. Good times. Happy to be back, guys.
Absolutely.
But plenty of action, I think.
And look at the visuals on our screen.
Yeah.
Bon homie. I mean, this is the Shanghai Cooperation in Works. I mean, I think that those are visuals from the latest meeting that happened this morning between Prime Minister Modi and the Russian President Putin. And of course, yesterday it was all about the headlines that came in from that bilateral meeting between Mr. Modi and Mr. Xi Jinping. So yeah, something very new, I don't want to say new world order and all of that, Prashant, but big diplomatic meetings over the weekend.
Yes. Absolutely. And coming close on the heels, of course, of the 50% tariffs in the US, right? That's the context which I think is important. But let's take it from the top and we'll sort of play some of these visuals out through the course of the day. What you need to know. So the Prime Minister Modi and Chinese President Xi met for nearly an hour in Tianjin in China. Almost an hour-long one-on-one meeting. And this is Prime Minister Modi's first visit to China in 7 years. And obviously, the hope is that this basically signals a diplomatic thaw. Tensions have been high since those Galwan clashes in 2020. And it looks like it's now getting a little better. Both leaders, by the way, stressed that India and China are partners, and not rivals. And of course, there was a lot more which was said. There was a statement. There was, of course, the Foreign Secretary briefing, etc. I'm not going to go into all the details. But this is important, not just from a geopolitical standpoint, but from an economic standpoint as well. I mean, you know, China is, of course, a huge trading partner for India. We run a big deficit with China even now. Now, that's one. Second, the GDP number here in India for the second quarter really blew past expectations. So 5-quarter high at 7.8%. I mean, this is far higher than what anyone thought. And we'll have more on this in a bit from now. Some technicalities involved, like, deflator being very low, etc. So more, as I said. One more sort of news point which came in, all happening, by the way, on Friday, was that Trump's global tariffs were ruled illegal by a federal appeals court in the U.S. This happened after market close in the U.S. Now, does this mean that tariffs are paused? No, tariffs continue. So Trump has until mid-October to appeal to the Supreme Court before the ruling of the Federal Appeal Court takes effect. Even if, and I've said this before as well, even if the court system, even the Supreme Court, for example, says that, these tariffs are illegal and they've got to be reversed, even then, there is enough with the executive, which is the president, who can use other sections like 301, 308, etc., and push these. They become a little more cumbersome to implement, but they've got the power to do it. And tariffs are central to this regime in the White House right now. So I wouldn't get too excited with what's happening as far as the courts are concerned. Anyway, just take note of that. U.S. equities, they sold off on Friday. S&P was down 0.6, but it was really the tech index which was down 1.15% lower. U.S. core PCE, which is watched by the Fed very closely, that accelerated to about 2.9%. That is the month of July, largest increase since February. That hit stocks like, the tech space, basically higher inflation, lower chances of rate cuts in the month of September. 16th, 17th is the meeting of the FOMC. And then, of course, names, largely IT names sold off, Dell, NVIDIA, etc. U.S. cash markets are shut, later today. Futures are open, but for a short bit. But I guess when you come back tomorrow, it's not going to be very much in terms of cues, except what's happening in Asia. And now I'll come to India and just sort of tie in the levels. We, of course, have been a huge underperformer. If you look at the MSCI India compared to the MSCI Asia Pacific ex-Japan, basically Asia ex-Japan, we've lagged now for the fourth straight month, and the quantum of underperformance is increasing. Just look at July till date, which is basically quarter till date. FIs have sold nearly $5 billion in cash, and Nifty is down about 4% or so. And of course, there was that big blowout move on the rupee, right, on Friday. Past 88, there were, there had been one touches, but basically past 88, 88, 20, etc. At some point, the RBI will reassess whether they want to step in. GST Council meeting this week, I think that'll be important as well. Although, I mean, as we saw, a lot of pre-positioning is what matters with regards to things like this, because the market is well aware of what may happen. Which gets us to levels, right? Daily lower Bollinger Band for the Nifty, which should be a support, is 24,294. 24,300 roughly is the lower end now, where the market should find some stability, some support. Resistance is 24,608, all hourly moving averages, 24,608, 20 hourly. And then the 40 hourly exponential is 24,706, just with the difference of 100 points. Bank Nifty was lower for the 5th straight session. Immediate, and I'll start with resistance here first, is the 20 hourly, which is 54,174, and then 54,588, which is the 40 hourly exponential average. Support is the low on the 9th of May, which is 53,483. So those are levels. GIFT Nifty will give you a quick sense of how we are likely to start. We'll pick it up from there. It's a sort of flattish 30, 35 odd point bump up at this point in time. Let's go across to Nigel on the wall with what the F&O stats are telling us. Nigel, over to you.
Well, the markets, they were looking forward to some kind of good news. So in that sense, the GDP print actually, it provides at least some kind of positive sentiment. However, the big change or the big turn in sentiment will only come if Trump's tariffs, they are more rational. And that's going to be the big cue. So yes, the quarter one GDP number was very, very good. Quarter two could be a little bit softish, but that is unlikely to move the needle too much from a market's perspective. But if you're taking a view that the 200 DMA is going to get respected both on the Nifty and the Nifty Bank, now we're within 1.5% to around 2% on both the key indices. That's the Nifty as well as the Nifty Bank. So if that is your view, then in fact, there'll be some kind of creeping in or some kind of chipping in is what you're likely to see, since the indices are closer to those important support levels. Two indicators are moving towards the stretch levels, though. The FI net shorts, they have moved to closer to 1.75 lakh contracts on the short side. So that's very, very high. And also the PCR, that's come down to the lower end of the range of around 0.7. Let's explain both of them to you. In Friday's trading session, the FIs, well, they added short positions, close to 8,200 contracts. The short position goes to around 91%. So that's where you're seeing that the net short positions are at around 91%, or in absolute terms, 1.75 lakh contracts. How did the PCR come down? Well, call writers, they're back in the game. They went ahead, in fact, wrote calls very, very aggressively. 24,500 call, 24,550 call with the premium around 50 rupees. So going by this particular strike, the bears will want to defend this 24,600 odd mark. While on the downside, there was some writing that we saw at around the 24,400, put the premium around 60 rupees. So punching in both these premiums, you're getting your range for the day. On the upside, this 24,600 level becomes extremely important. That's the near-term resistance mark, while support comes in at around this 24,340 going by the options data. And the 24,600 mark is important because the last few trading sessions, well, the Nifty has been on a declining trend. On a day-to-day basis, we have been seeing that the Nifty has been making lower highs. So for today's trade itself, this 24,572, that'll be the first important mark. So that range is very, very important. Stocks that I'm looking at, well, I'm looking at IMFA. That's a stock that's come back on the radar. The last few trading sessions, it's actually outperformed the Nifty, the mid-cap index, and even the metals index. Ferrochrome prices have perked up yet again. We know it's backward integrated and some kind of positive sentiment with regard to stainless steel production globally as well. So I'll keep an eye out on that one. It's been an outperformer, but it's still, if you look at it in the last 10 months or so, it's still not at those highs that we saw. So that's one name I'll keep an eye out on.
Okay, well, those are some stocks to look at. By the way, across Asia, we have very, very different hues in the two big markets in the region. Japan is down 2% and China is rallying big time. Look at the Hang Seng. Hang Seng is up 2%. In Japan, the concern is around the tech sell-off in the US. Remember, the Nasdaq was down 1% on Friday, and a lot of the related stocks in Japan are down sharply this morning. In China, the Caixin survey has just come out, and manufacturing indicators there are at a 5-month high for August. So numbers looking very good out of China this morning, leading to that big bump up on the Hang Seng. So let's see, let's pull up the implied open once again and see how we're going to start off with. It's been a very, very rough and tough week, the last one that is for our markets. So today, Yeah, 37 points higher. The bulls can take that. They'll take anything they get at this point in time. But yes, we're starting with some more optimism as we have entered this new month of August. Well, let's take the conversation forward. Lynn Alden, founder at Lynn Alden Investment Strategy, is with us now. Lynn, thanks so much for joining in. So let's start with the U.S. market itself, because there's so much going on. One, there is the whole legal challenge to these tariffs. And the second, I mean, it's the jobs report on Friday, and then it's all eyes on the Fed. But in the interim, we've started seeing some weakness in stocks, some profit taking. How do you expect the next couple of weeks to play out?
I expect to be somewhat sideways to down. There are a number of headwinds. The valuations are pretty expensive. It's been a pretty euphoric market ever since the bottom after Liberation Day back in April. It's been a pretty relentless grind up, and I think some of the steam has to come out of that. And I think going forward, the tariffs are going to put some fiscal headwinds a little bit on the U.S. economy. We're going to see that somewhat offset by a dovish Fed, but that's not as powerful as some of the fiscal backdrop that we've seen. In addition, I mean, when Liberation Day happened and the markets freaked out back in April, credit spreads blew out, equity valuations went down over the concern around tariffs, and the tariffs today are roughly at those levels that the market feared back then. So I think it's rational for the market to price in some frictions going forward rather than kind of the euphoric situation that they've been pricing in for the past few months.
Lynn, are you watching developments here? Prime Minister Modi's visit to China, a bit of a realignment, it looks like. What's your sense, Lynn? As someone who's based in the U.S., how would you view these developments?
I think this is another piece in a structural move toward more of a multipolar world and a realignment. There's already been a multi-year trend, for example, of central banks around the world having more gold in their reserves relative to dollars and treasuries. That's partially because of price appreciation, but also because of different purchase rates, more of a shift toward gold. And I think that this current approach of tariffs further accelerates some of those trends. It encourages more bilateral trade agreements and things like that. Various organizations such as Shanghai Cooperation Organization and BRICS, BRICS Plus, they've had frictions over the years, but I do think that these are very real trends that are slowly coalescing so that countries around the world have these alternatives. And I expect this to gradually keep happening, maybe 2 steps forward, 1 step back, 2 steps forward, 1 step back. But I think it has legs to it.
All right. Hi, Lynn. Good to see you. And as always, well, you've been in the camp that prefers emerging markets over developed markets. The Indian markets have gone through a set of challenges. And those tariffs, they weren't just a negotiating tool because now they're implemented. What's your view on the emerging markets from here on? And where does Indian markets place? Because no two ways about it. We have underperformed of late. But obviously, in the longer term, we have got our tailwinds.
So I continue to be pretty bullish on emerging markets. My preference has been toward more Latin American markets. Brazil's another market that has been hit with pretty high on the tariff range, and yet they've managed to have decent performance this year. So it's kind of market specific. One of the things I've highlighted before is that with a weaker dollar this year, some of these previously underperforming emerging markets, such as Brazil, such as others, they've caught more of a bid this year. Whereas India historically has been a stronger equity performer, and they've generally suffered this year. Structurally, I'm still very bullish India longer term for multiple reasons that are pretty well known. But in the intermediate term, I continue to like and have a preference for some of the more value-oriented emerging markets out there. So the Brazils, the Chinas of the world, at least until we see some sort of rotation to the contrary.
Okay, so the B and C for now. Out of the BRICS, India, perhaps a more longer-term story. Got it, Lynn. Thank you so much for joining in. Good to have that perspective from you today. Let's quickly tell you what else we've lined up for you on the show over the course of the next 2 odd hours. At 8:35, we will have a full-blown discussion on Reliance. What were the key takeaways from the AGM? What does it mean for the stock, the geo listings, so on and so forth? Prabal Sen of ICICI Securities and Balaji Subramaniam of IIFL Capital Services will weigh in. At 9 o'clock, we have Param Desai of Prabhudas Liladhar joining in. We'll talk about some of the important trends in the pharma sector, including the fact that ownership quietly has been shifting big time in favor of private equity. What does that mean for shareholders, for, of course, all stakeholders of the sector? We'll discuss that. At 9:20 a.m., Ramdev Agrawal of Motilal Oswal Financial Services joins in. He's a market master and he's joining us from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. At 9:35, it's macro's full throttle. That huge GDP number, 7.8%. What does it indicate? Does it do we have reasons to look at higher estimates for the rest of the year? Pranjal Bhandari of HSBC and Sameer Narang of ICICI Bank join in. And after that, we get into a conversation with Keynes Technologies. Jairam Sampath joins in and we talk about demand trends and, of course, the whole China perspective. If there is more cooperation with China, what does it mean for electronics manufacturing here in India? Towards the end of the show in our special segment, It's the Economy, Lata will be in conversation with Ashish Vaidya of DBS Bank and Mutul Kotecha of Barclays as the rupee hit a brand new fresh low versus the dollar on Friday. In fact, talking of Lata and the macros, let's bring her right in. Because at least the one great piece of news that we had after market hours on Friday was this GDP print, which is much above estimates. But is it more in the technical statistics or does it really indicate a lot of buoyancy in the economy? Let's go across to Lata for some perspective on this. Lata, morning.
Well, first up, it is a good GDP number. But the point is it as good as 7.8%? For that, we have to understand the difference between real and nominal GDP. The NSO, the Statistics Organization, doesn't collect real GDP. It collects how much value has been added at today's prices, current prices. And that is the nominal GDP, which has grown by 8.8. Then, having collected that, it deflates it. It brings it down by the extent of the inflation. Now, what inflation? WPI or CPI? What it does is it takes 60% of WPI and 40% of CPI. Some mix, various headlines of WPI, various ingredients of CPI in that proportion. But the point is, neither of these contain too much of services. Whereas our GDP is 66% contributed by services. At a time in April, May, June, the WPI was negative in June. The 3-month average is 0.28. And then there's the CPI, whose average is about 2.5%. So when you deflate it by such a small number, you get a very high real GDP. But services inflation is not included in that. Because we don't have a PPI. Other countries have a producer price index. We need to evolve one, and the NSO is working at it. Until then, in all years when WPI goes to negative or very low numbers, we get this, slightly extremely good-looking GDP. Having said that, there is a statistical overstatement, but having said that, it's a very good number. Because even if you take nominal GDP, our poll threw up 8%. The number that came in was 8.8. So it is better than expected. And certain categories like services, which have done very well, it's 9.3. And public administration, government services is up 9.8. That is a real growth because you have seen government capex. If you compare this Q1 to last Q1, it is up by 52%. So there is a real growth over here, but you have to admit that there is an overstatement. What is the result? The Reserve Bank may not cut rates in September. Much was expected, but if the economy is growing gangbusters, how will you justify the rate cut? The other thing is most of the economists have upped their forecasts. I'll just cite one or two. CLSA has upped it from 6.1 to 6.3. Kotak has upped it from 6.1 to 6.5. Citi, Samiran Chakrabarti always expected this WPI, problem. So he already had 6.7. Now he's taken it up to 7.2.
All right, Lata, thank you very much for that. That's a very precise explanation. Of course, it's a great number, but there is some technicality involved. Low deflator, perhaps a reason for that very large blowout number, which you saw on Friday. We'll take a quick commercial break here. We're going to come back. More stock-specific action that we want to get to you. Top 10 stocks on the other side. Stay tuned.
Welcome back. So the cues across Asia are fairly mixed this morning. Two large markets going in totally opposite directions. Japan is down, reacting to US tech stocks declining on Friday. And China is up because the PMI numbers out of China, the private survey, Caixin survey, it goes by a different name now, that is at a 5-month high. So manufacturing data out of China looking good. Hang Seng's up over 2%. Let's get the implied open up. Now, given the fact that we have such good news coming in the form of GDP, and of course, there's a GST meeting this week as well, despite all of that, just getting about a 35-point uplift at the start. But let's see. Maybe the bulls can try and build on this during the course of the day. As always, we have some stocks as well that you should be keeping on your radar. So let's straight away get to the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Sonal, let's quickly recap Reliance Industries. The big takeaways. Obviously, the Jio IPO is finally going to be a reality.
Oh, yes. So there has been a timeline which is announced now. Jio plans its IPO in first half of calendar year 2026. The broadband traction and plans to sell in 5G stack to overseas customers as well. So that's the other big news. Retail ambitions that included 20% CAGR growth target for the next 3 years. FMCG also should see large investments coming in from the company, $12 billion in the next 5 years itself. They also announced a new JV with Meta, and this is for expanding its partnership with Google Cloud. There's a lot of focus on AI as well, and new energy ambitions, they have been scaled up. The targets have been outlined, specific capacities in specific years as well. Brokerages, they are sanguine. Kotak Institutional Equities has an ad call, target 155 per share. HSBC has a buy call with a target of 1630, and JP Morgan has an overweight call on the stock with a target price of 1695 per share.
All right, Sonal, thank you very much for that. So Reliance, and of course a discussion coming up in a short order on what was announced. I mean, it's of course important for Reliance, but also perhaps for some other sectors out there. Well, let's talk about IndusInd Bank and RBL Bank. Financials in focus. Gaurav is here with details. Gaurav, morning.
Well, good morning. Both the banks actually held its AGM. So there are two things to highlight. For IndusInd Bank specifically, the highlight from the AGM was that shareholders have now rejected the proposal to have additional director nominated by promoter. Remember, this was earlier the news, and because of which there was some speculation that this will also turn as a positive news, because the promoter is also asking RBI to give approval to add additional stake. When we look at the promoters and shareholders, around 54% of the shareholders voted against the proposal because proxy advisors raised some observations about the said resolutions. In fact, promoter also issued a statement. What they said is that they believe there is a misinterpretation and they will be happy to address the concerns. So definitely on the back of this news, IndusInd Bank is definitely going to be in focus. RBL Bank, on the other hand, there also we saw board actually approving the fundraising. Remember, this is going to be enabling resolution for around 6,500 crores of fundraising in this year. So definitely both these banks are going to be in focus today.
Okay, all right. Thanks a lot for that, Gaurav. Well, let's hop across to Rima. She's here to tell us about Vodafone Idea. Morning, Rima.
Hi, good morning. So TRAI has released the July subscriber numbers, and the key takeaway is that Reliance Jio has added the most subscribers, but both Bharti and Reliance Jio have added more than 4.5 lakh subscribers. Vodafone Idea is in focus because they continue to lose subscribers. In the month of July, Vodafone Idea has lost 3.6 lakh subscribers, which compares with the 2.2 lakh subscriber loss in the prior month. And I'm just going to leave you with how the subscriber base tally stands as of now. In terms of not revenue market share, but subscriber market share, Jio is right on top with about a 41% market share. That's 477 million subscribers. But we know that Mukesh Ambani, in his speech, AGM speech, spoke about how Jio's subscriber base has crossed 500 million. And Airtel follows with nearly 400 million subscribers. That's about a 34% subscriber market share.
Okay, all right, Rima, got it. So we'll keep all of those stocks on our radar as well. Let's talk about Ather Energy, because Ather Energy had a big day and it announced a lot of new plans, etc. Sudarshan's here. Sudarshan, I forget the name of the day, what they called it, but big announcements coming in.
So it has made major announcements over the weekend, but before I talk about those announcements, let's take a look at the registrations that was seen in the month of August. Company has seen highest ever registrations in a month. It was up 61% year on year and up almost 9% month on month. Now coming to the new announcements. First, it has announced new platform, that is EL. Second, it has showcased Redux, that is a concept motor scooter. And third, company is saying that it will release Ather Stack 7.0 that will be used for interaction with scooter via voice. through the help of AI. Now talking about the commentary, company is saying that it can build 3 to 4 scooters with the help of new platform over the next few years. An EL platform that company has launched is going to play a major role in improvement of margin over the next few years. Second, on the pricing front, company is saying that it's not looking to launch any new product under the price of rupees 1 lakh, and 1 lakh it believes that it's going to be Lakshman Rekha for that. Now the market share, 20% market share, company is saying that it's very much on the horizon, because already in South India, its market share is already up more than 20%, and overall India market share 20% is very much on the horizon. And last is rare earth magnet issue. Company is saying that its supply has improved, but as per its base case, it's moving to low rare earth from HRE, that is heavy rare earth magnet. But overall commentary is positive from Ether Energy.
All right, Sudarshan, thank you very much for that. So that is Aether in focus. Now, Zydus Wellness and Aurobindo Pharma are the other two names we want to focus on from the pharma space. Vinny is here with details. Vinny, good morning.
Hi, good morning. So Zydus Wellness, we are seeing positive news for coming in here. Zydus Wellness has acquired UK-based Comfort Click, which helps them foray into the UK as well as the European market. Now, obviously, 100% stake is what they've acquired. This is at a equity value of around £239 million. Now, this will help them in vitamins, mineral supplement, and this is estimated, the market in Europe for these two things are estimated at around £11 million. So positive, takeover or acquisition that is coming in from Zydus Wellness. Overall for Comfort in terms of revenue also, it was £134 million revenue in FY25. EBITDA was at 21 million, expected to be positive for the company. Now on the flip side, we have Aurobindo Pharma, which is actually expected to be under pressure given that its Telangana unit had seen an inspection from the US FDA from 21st of August to 29th of August. And this is an API manufacturing facility in Telangana for the company. They've received Form 483, 5 observations for this one. It's procedural in nature, not more in terms of integrity issue, nothing on that front, but a procedural nature in terms of the 5 observations. Keep an eye out on both these stocks.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Upasana. She's here to tell us about some more stocks that are in the news. Morning, Upasana.
Good morning. First up, let me start with NCC. The company's water division has bagged 2 orders in the month of August worth nearly around 788 crores. Next up is REITs. Now, company has bagged orders worth nearly about 25 crores from NTPC for a period of nearly about 24 months. Hence, even this stock will be on our radar today. And lastly, coming to PG Electroplast, the company has signed MOU with Government of Maharashtra to invest nearly about 1,000 crores in Greenfield project in Kamargaon, that is in Ahilyanagar. So all in all these 3 stocks we'll be closely watching out for today.
Okay, all right, Upasana, got it. Thanks very much for that. We'll keep them on the radar. So let's actually recap our list of stocks to watch this morning. The ones that have positive news flow would include names like Reliance, RBL Bank, Aether Energy, Zydus Wellness, NCC, REITs, and PG Electroplast. Stocks with negative news flow would be IndusInd Bank, Vodafone Idea, and Aurobindo Pharma. Okay, so those are the equity market cues for the morning and the equity stock list to watch. Let's also quickly catch up with what's happening in commodities. Manisha is joining in with the latest. Manisha, good morning.
Morning, and thank you for that. I'll start with the crude oil prices, which are extending decline. If you look at the month of August, this is the first monthly decline after 4 months of gains that we've seen in case of the crude oil prices. It has to do with weak demand concerns, excess supply that we're looking at into the market, the U.S. summer demand season also with end us with this long weekend. The markets will watch out for the OPEC Plus meeting, which is on 6th of September, where we will understand on what their output plan going forward is. In the meanwhile, it is all about the SCO summit in focus, where you have the India, China, Russia state of heads in attendance, and the statements coming in from there could also be moving the crude oil prices. What also is trading quite firm is the precious metal prices. In the Indian space, we have gold and silver both trading at all-time highs. In the international market, gold is just $50 away from hitting that $3,500 of an ounce, which is an all-time high yet again. And silver is trading at 14-year highs in the global markets there. The month of August has been quite strong, and the markets are taking support from trade tensions, supply tightness, high investor demand, and the gold-silver ratio also quite supportive. And the markets also seem to be looking at almost baking in that 25 basis point rate cut in the month of September, the decline in US dollar index, a very strong safe haven buying. All of those factors have kept the precious metals in favor.
All right, Manisha, thank you very much for that. So that's precious metals in focus. Well, Sudarshan is back with us with the brokerage call of the day. So what are you picking up? Good morning.
Good morning, Prashant. So first one is CLS on IT. It says that by US Fed, so it's expecting a rate cut of almost 75 basis points over the next 1 to 1.5 years. And this could lead to a 10 to 15% increase in valuation multiples for Indian IT companies. And there is a potential for a discretionary demand revival in realty, utilities, materials, staples, and energy. And it is positive on India's IT sector, attractive valuations. It maintains high conviction, outperformed two stocks, and those are Persistent and Tech Mahindra. It also maintains outperform call on TCS, Infosys, HCL Tech, and Wipro, and it has a hold call on LTI Mindtree. Morgan Stanley has initiated coverage on CG Power with buy call and target is 799. It says it is among India's most diversified capital goods players with a strong presence in manufacturing. It also is going to be a beneficiary of strong growth in power. For industrial segment, it sees revenue and EBIT CAGR of 14% and 15% respectively over FY25-28. For power systems, it sees revenue and EBIT CAGR of 35%, 42% respectively over FY25-28. Last one is Indigo. Investec has come out with a no. It has a sell call and target is 4,050 per share. It says globally, airlines typically do not have concentrated promoter holdings. But in Indigo, Bhartiya still owns 36%. That is exceptionally high for a volatile business that is airline. And valuations are already pricing aggressive growth strategy for FY30. And valuations are looking very stretched. And any additional supply could weigh on the stock price. And that's the reason it has a sell call.
Okay, all right. Sudarshan, we'll keep all of those stocks on our radar. Thanks very much for joining in with the update. Let's take a quick break. We'll come back on the other side. We'll have Ambrish Baliga joining in for some stock ideas for the day. And also we get into a full-blown discussion on Reliance and the key takeaways from the AGM. Prabal Sen of ICICI Securities and Balaji Subramaniam of IIFL Capital Services join in.
Welcome back. Hope you're having a good morning. Well, as promised, let's get in Ambrish Baliga, independent market expert who joins us on the show. Hi, Ambrish. Good morning and good to see you in as always. Well, let's focus on the banking names because the Nifty Bank itself has recently underperformed. What's your view on IndusInd Bank? You know, there's that news piece that's coming over the weekend that the shareholders have defeated the resolution for promoter to appoint an additional director. Well, the management has come out and said, you know, they clarified that, you know, they're happy to iron out any kind of issues. Right. But what's your view on IndusInd Bank and RBL Bank as well as looking at some fundraise? View on both these two names?
See, in the short to medium term, I think there will be pressure on IndusInd Bank because whenever there is a management change and with a new CEO coming in, there would be further cleanup, irrespective of whatever the earlier management or the board has talked about already cleaned up balance sheet. But then whenever a new CEO comes in, there's a further cleanup which happens. And that could also surprise the markets going ahead on the negative side. So I think for the time being, we should see pressure on IndusInd Bank. So right now, I would not recommend. RBL, yes, the stock has already moved up. But then when there's a further fundraise happening, I think the stock will hold on. But from here, I don't know how much upside would be there. I think that could be a bit limited because the way the stock has moved, I think the upside is limited. But for the time being, I think there'll be a cushion because of the fresh fundraise.
Amrish, hi, good morning. Markets, overall, what's the view? A bit of a downdrift, right? And the rupee also not helping at the margin. Hit a new all-time high, past 88. What's the view building?
See, on the markets, I don't see too much of a downside from here because anyway, the tariffs have been there for a while, and just because it has been, reconfirmed and applied from 27th, and because of which we saw that, knee-jerk reaction in the last couple of days. But then, I really don't see the markets going too much below that 24,200 levels. And let me tell you, as investors, we have a choice. Unlike a business owner, I think as investors, we have a much larger choice because the business owners who have been affected by tariff, I think it'll be very tough for them, at least the near future, at least in the medium term. But then from a market perspective, I think tariff has also created some sort of opportunities because, we have clearly seen that the government is working overtime to push consumer demand. So I think there would be a lot of opportunities in this pocket of consumption, especially FMCG, white goods, automobiles. I think that's where the opportunity would be. And as investors, I think we should always look for opportunities and utilize that.
Okay. All right, Amrish, we'll get to some more stocks and questions in a bit. But for now, let's put the spotlight on Reliance Industries. Big announcements coming in from the AGM, including the Jio IPO timelines. Let's go across to Sonal once again and take stock of the street view. What are the broker calls saying, Sonal?
Largely positive, but of course the big headline was the Jio IPO and the timeline there. Let's start with Kotak Institutional Equities. There's an ad call. They say company reiterated target to double EBITDA between FY22 to FY27. That is an important reiteration. Jefferies says they have a buy call and FMCG should see large investments to propel revenues to $12 billion in 5 years. New energy ambitions have been scaled up. With Jio's IPO, it could lead to potential holdco discount in Reliance Industries. So the valuation continues to be very important. HSBC has a buy call. They say commitment to improve pace of growth of retail and launch of new energy business was the theme. So the new aspects in terms of capacities and timeline in new energy business was very important this time. JP Morgan has an overweight rating. They say key announcement was, of course, intention to list Reliance Jio by June 2026. This may not be value unlocking anymore. Street valuations for Jio in Reliance Industries SOTP has been marked to market to peer multiples already. There is a probability of higher tariffs into IPO. The increases could be a catalyst for the Reliance Industries stock as well. They say there have been concerns around eventual holdco discount crystallizing for Reliance Industries, but a fair degree of the discount is already priced in, so that's not such a big worry, according to JP Morgan.
Okay, all right. Sonal got that. Thanks very much for a quick roundup. Well, let's take this conversation forward. The AGM, of course, saw Mr. Mukesh Ambani lay out the growth blueprint for the company. Reliance Jio is all set to go public in potentially what is going to be the biggest listing that we've seen in the history of the Indian stock market. And also there are big plans on AI and, of course, the plans for the new energy business as well. Prabal Sen from ICICI Securities as well as Balaji Subramaniam of IIFL Capital are with us. Gentlemen, morning. Thanks so much for being with us. Balaji, I have to open with you. How many months and quarters of us discussing, right, what is happening with the Jio IPO? Well, it's finally coming through. But it was interesting that the stock didn't show the kind of enthusiasm that you'd expect now that we have a formal timeline. Your first thoughts?
Good morning. Thanks for having me on the show. So finally, we have the announcement of a potential IPO of Jio Platforms, which has been, long lingering. And, finally, there is some clarity with the company itself saying that, it should happen by the first half of 2026. So firstly, I think, one of the reasons why the market did not react could be that they are going ahead with an IPO and not a demerger. Because with any IPO, once a new listed company comes in, there is this holdco discount, which will start getting applied. and that could be anywhere between 20 to 50%. But that said, the comforting fact is that since we don't know how much exactly is going to be the IPO size, and what percentage of the company would be getting listed. So if it's a small enough chunk of the company that gets listed, then the holdco discount should not be that high. And there is also a trade-off involved, because if you go with a demerger, then unlike say an IPO, then Reliance will also lose hold of the majority stake that it has got today in Jio platforms. So maybe between the two, the company and the board felt that it would be better to go via the IPO route.
Morning, gentlemen. Balaji, and how does this differ with what happened with JFS, Jio Financial Services?
So JFS was an out-and-out demerger, and there things were quite different. Here there are private equity investors that are involved, and let us not forget that telecom is a capex-heavy business. So to that extent, I think in this case, Reliance wanted to ensure that they hold on to a majority stake even after the IPO.
So that explains the concerns, this holding company discount, Balaji. But overall, I mean, they are talking about top dollar valuation, one of the largest IPOs ever, largest entities. And also, we don't know the details. I mean, we don't know the exact mechanics of it. But, what is the kind of valuation that right now you're putting to Jio, to the telecom business, and the fact that they're looking at these big strides in AI? Remember, there were a lot of other announcements, the alliances with Meta, with Google, AI for all in India, etc., which is going to be the next big piece that is being built through Jio.
If you look at my SOTP, I am ascribing somewhere around $135 billion EV to Jio platforms. So this includes the telecom business, which is Reliance Jio Infocom, and it also includes the digital businesses where the annual EBITDA run rate is close to $500 million. So put together, I am at $135 billion. There is a debt of around $21 billion. So my SOTP builds in around $115 billion of market cap for Jio platforms. And my $135 billion EV roughly translates to around 12 odd times FY27 EBITDA for Jio platforms. So for reference, Bharti today, if you just take the India business and if you remove the tower company, that is Indus, it is trading at somewhere around 10.5 times FY27 EV EBITDA. So to that extent, Jio at my SOTP kind of implies a 15% premium for Jio or rather JPL versus Bharti. So that is where we are. As far as these new announcements are concerned, these are all, clearly long-term positives. They may not contribute a lot in the near term, but as JPL is looking at more and more enterprise businesses, they are talking about digital services beyond connectivity, which they are targeting to offer to enterprises. Even now, they have been offering some of these, but I think in the long run, all these AI tie-ups will help JPL cater more to enterprise demands. Some of them, like GeoPC and all, will be more relevant from a home broadband rollout perspective. If you look at Jio, they today have around 21 million homes connected through either fiber or through FWA. And as this number rises going ahead, I think these are some of the areas through which they can extract a higher wallet share of the households.
Okay, all right, got that. So you're ascribing a value as of now, an enterprise value of 135 billion to Jio. Let's also talk about the other big announcements, of course, when it comes to O2C or the new energy business. Prabal, hi, morning. Thank you for waiting by. So the big headline was, right, Mr. Ramani saying that the new energy business could eventually be as big, if not bigger, than overall oil to chemicals. What were the key takeaways for you, and in terms of watching the traditional energy side of Reliance, O2C, and the new energy side, what will be the key triggers or watch points over the next couple of months?
I think, first of all, in terms of discussing the scale of the business, new energy today, if you look at it, the 75,000 crore investment that was announced initially when the plans were announced, I think way back in 2022, very clearly, if you have to get to 50,000 crore plus of EBITDA, which is what is the average OTC EBITDA, let's say for the last 5 to 6 years, if you have to get to that kind of a level, number one, the investments obviously will go up by a factor of 4 to 5x, depending on what kind of pre-tax ROC you assume. If you assume, let's say, 16% pre-tax ROC, which is sort of a standard kind of an IRR that you would expect in investments of this size, that itself takes you to about a 3 trillion investment. So I think very clearly there would be a more aggressive capex rollout in terms of the plans that have been announced. What is obviously encouraging is now that the contours of the business are becoming much clearer. There are much more clearer milestones being shared for the individual segments of the overall new energy value chain. So obviously the visibility on those businesses taking shape and basically starting to monetize the investments that have already been made or will be made in the next couple of years. I think that is something that's becoming clear. In terms of scale, as I mentioned, it is obviously a very ambitious objective, as are most objectives when it comes to Reliance. But, achieving a 50,000 crore EBITDA is something that will not happen in a hurry from what we understand, but it is something that definitely is on the cards, given the sheer scale of the projects that have been announced and the plans that have been announced in terms of, milking, sort of bringing together the entire chain of producing renewable energy, using it to produce green hydrogen, and then going on to produce green chemicals. And on the side, selling the green energy that is left surplus after captive requirements are utilized. So it's a value chain that is being set up similar to the entire integrated value chain for the downstream petroleum business that they've set up over the last 3 decades. This is something that's a long haul, but it's a massive transformation in terms of their overall energy business.
All right. Thanks very much, both of you. Quick insights, but I think really good to get them. Prabal and Balaji, appreciate your time here on CNBC TV18 with that perspective on Reliance and what they plan to do in each of the businesses. I mean, the other, of course, is the consumer business, right? I mean, big plans there as well. We'll talk about that in a bit. We'll take a break. We're back. Technical trade. Sudarshan Sukhani and Siddharth Rai will be with us with exactly that. We'll also focus on the big movers on Friday, which saw a sort of large volumes, and of course we'll get you the delivery stats as well. Stay tuned, coming up.
Welcome back. Well, let's now get to some interesting stock movers. Hormaz is joining in, looking at some interesting volume buzzers, delivery stats, technical aspects. So let's see what are the stocks on Hormaz's radar this Monday morning. Hormaz, take it away.
Good morning, Surabhi. And it is some of the names that bucked the trend in an otherwise weak market on Friday. Granules India was one of them. Of course, it ended off the highs of the day, still with gains of around 5%. And it was the highest volumes that the stock had since the 3rd of December last year. And that was the day when its Gagillapur unit had received that OAI status from the US FDA, post which the stock tanked over 10%. So almost 1.7 crore shares traded on Friday's trading session, which is well above the 20-day average of just around 16.5 lakh. And for the last 4 sessions, the volumes on Granules have all been higher than its 20-day average, and even almost 27 lakh shares were marked for delivery compared to a 20-day average of just 7 lakh shares. So interesting volume activity seen on Granules. The other one, of course, is Vardhaman Textiles. Profit booking came in after that strong up move on Thursday, but the common factor between Thursday and Friday was that both the sessions saw very high volumes. Even Friday's session saw almost 69 lakh shares traded. Thursday's session had close to 3 crore shares traded, and you take that for the 20-day average, that is only almost close to 19 lakh shares, and excluding Thursday, that 20-day average falls to even lower, to almost 5.7 lakhs. So it's continuing to remain above that 20-day average, and almost 6.5 lakh shares were marked for delivery which is not only higher than its 20-day average in terms of traded volumes, but of course on the delivery volumes as well of close to around 2 lakh shares. Jindal Poly was the other one that bucked the trend on Friday, almost 15% higher in that final trading session of the week, the biggest single day gain since August of last year. And if you go back to volumes, almost 51 lakh shares were traded, which is the highest since almost December of 2010. And the 20-day average is only 27,000, and 3.5 lakh shares were marked for delivery compared to a 20-day average of 13.5. And Panama Petrochem is the last one on the list. Fifth day of losses on Friday, the biggest single day fall since June last year, highest traded volume since July of last year, 3.5 lakh shares traded, a 20-day average of just around 25,000, and for delivery as well, 1.5 lakh shares marked for trading compared to a 20-day average of just around 13,500.
Okay, all right. Thanks a lot for that, Hormuz. Well, time to slip into a short break. Come back. We'll continue our focus on markets. In fact, we'll get you pre-open rates, and Param Desai Prabhudas Leela will also be joining in to discuss the key trends in the pharma sector.
Welcome back. This market pre-open we just kicked off, and just 14 minutes, 14 and a half minutes to go for the market open. So that's where we're at. August sales numbers are all starting to flash at the bottom of the screen. Bajaj sales at about 4.17 lakh units. And of course, the comparable figures also are coming up. Sudarshan Sukhani and Siddharth Rai are with us with what they'd want you to do as far as specific trades go. Gentlemen, good morning. Great to have both of you here. Sudarshan, how things set up to your mind? Bit of a drift lower for the market over the last few sessions. Are we at the lower bounds now?
Yeah, good morning. See, we are already in some kind of a downtrend. That could be a correction, that could be a longer downtrend. But the trade is to look for shorting opportunities. So that drift is likely to continue on the downside. Now, what really happens is that intraday, sometimes markets move on their own. So I'm not giving an intraday suggestion. The larger view is that the Nifty should break down and seek lower levels towards 23,000 or 23,000 plus somewhere. So every rally should be used to build short positions. That's the view. Intraday, anything can happen.
Okay, that's a straight, clear statement that every rally should be used to build short positions. Take that on board. Thanks for that, Sudarshan. We also have Siddharth Rai joining us. Siddharth, what's your view? I mean, would you be looking at any index trades at all? If yes, what's the preference, Nifty or Bank Nifty?
Yes, sure. Subhi, good morning. And first of all, thanks for having me on the show. See, we saw quite a bit of a rough last week in the index. Even today, after some good GDP numbers popping in through the weekend, we're not seeing some very strong signals of a very strong opening, even if we look at the GIFT Nifty index. So this tells us that the momentum is still clearly not bullish. Having said that, so we see the first 1.5 hours is going to be very crucial for the index today, because this is going to set the undertone for this whole week. And for this 1.5 hour, we have to look at one level, and that is 24,500, because that will be the make or break level in today's session. See, if the index manages to go back above 24,500 in the first 1.5 hours, we can see a good short covering, a swift short covering towards 24,650, and in fact, even 24,700. But if we fail to do so by the end of the first 1.5 hour, we can definitely see this weakness continuing towards the next important level, that is 24,150. So I would suggest that only all the positions in an index should be taken considering this one level, that is 24,500.
All right. Hi, Siddharth. Good morning. Good to see you in, and Sudarshan as well. Siddharth, from a couple of perspectives. One is the PCR is moving to the lower end of the range, and the FI is net short. Well, that supports our case. And today, since the US markets will not be trading, hopefully the FI selling reduces. That's just a couple of points out there. Tell us individual stocks. What's in your radar?
Yeah, sure. Hi, Nigel. See, two stocks, both of them we have to buy because they are trading against the market's momentum. First is definitely from the FMCG space, where we are seeing some good, strong momentum building up. The stock's name is Marico. See, there has been a very good structure building up in the Friday session. We saw the stock running up from the day's low, and right now the kind of momentum is building up in this stock. I can see the stock moving towards 750 slowly and steadily. So Marico can be bought in spot. It is trading around 726, 27. So the stop loss will be 715, and our targets will be, as I said, the first target will be 749. Second target will be 765. The second stock is Dalmia Bharat. See, we've seen a very good momentum building up in this counter. It has completely ignored the volatility and weakness that is building up in the indexes. So even in Friday's session, there was a very good breakout seen in this stock. So momentum can be strong. The stock has managed to close above 2400, which is another good signal. So Dalmia Bharat can also be bought. In spot right now, the price is around 2401, 2402. It can be bought. The stop loss will be 2379, and our targets will be, the first target will be 2455, second target being 2470.
So two counter trend kind of trades, Marico and Dalmia Bharat. Good to get that, Siddharth. Sudarshan, what about you? You were saying you'd look for, along with the trend kind of ideas, things to sell. With stocks as well, is that where you're at?
Well, the selling mainly should be done in the Nifty. That's a much safer instrument to sell. But in stocks also now, there is a mixed bag. I have 2 buys and 2 sells. So CG Power is a buying opportunity with a stop under 680. ITC is a buy with a stop under 401. Paytm is an intraday short with a stop above 1228. And SJVN, which was Satluj Jal Vidyut Nigam earlier, SJVN is an intraday short with a stop above 95. So 2 buys, 2 sells. Primarily, the market should drift down.
Okay, all right. Gentlemen, thank you very much. Both of you, 2 buys, 2 sells is the sort of setup in terms of trades, etc., which we are getting at this point in time. I think the pre-open has now come to a close, and maybe we can look at some of this stuff in some detail. In terms of where we are at. So the Nifty is absolutely flattish. I mean, we saw a bit of a swoon, bit of a dip, and then it's kind of sort of come up very, very nicely and very, very sharply at this point in time. Let's get in Param Desai. He's with us. He's with the Prabhudas leader. Param, good to have you with us here. We're talking about hospitals, healthcare. We have the management of Narayana Health with us. This is, last week, and we asked them what's happening with this insurers versus... and that was, of course, a case of a specific insurer versus hospitals. But, we've seen this with other insurers as well, where hospitals have refused to sort of onboard, this or that insurer. It's been resolved now. I'm talking about, of course, the Association of Hospitals versus Bajaj Allianz General Insurance. How are you looking at this, Param? From a hospital's perspective, one factor which keeps coming up when we speak with investors with a slightly longer-term horizon, even those who are invested and have made money, is, they all say at some point, will there be some kind of government intervention because healthcare costs have gone too high? So let's just start there, Param.
Sure. So if you see, generally for most of the hospital listed companies, around 25 to 40% of their payer mix is coming from the insurance. Having said that, I think post-COVID, this insurance mix has gone up, and largely it's been getting replaced from cash or say from government scheme. So in that extent, I think the overall volumes have gone up with the insurance mix also going up. You also pointed out the healthcare cost going up. So if you see the ARPOB, which one of the indicator which we follow in the hospital space, has been growing around 7 to 8% in the last say 2-3 years, slightly much higher. If you see that is not a function only of price increase. I think that is also a function of say average length of stay going down, robotic surgeries going down, your efficiency has been improving more digitally. Most of the companies have been going up. So that has also been aiding the ARPOB to go up. So that is not only purely function of the price increase in my view.
So this risk, is there a probability? Should one consider this risk at all? Over the last couple of years, this came. Stocks sold off 10-15% if you remember. But then, of course,
yes.
That realization happened that is kind of very difficult to do. So just your thoughts?
Yeah, so if you see on the regulatory side, it's very difficult to tell in terms of what, but I think clearly Supreme Court or the government had passed on the statement that the standardized pricing won't be there. And to be fair, most of the listed corporate hospitals in terms of their services, quality of services are much different, superior than some of the standalone hospitals. So to have a standardized pricing, practically it won't be possible given that the private market share in India is largely 60-65%. one needs to largely depend on the private infra setup. So I think regulate the pricing may not be the right answer. But yes, from an insurance, as the insurance mix goes up, I think to that extent, I think some bit of say price rationalization can happen. But eventually, this will take some time to take place. Right now, I think hospital companies have a reasonably upper hand in terms of negotiation skills.
You know, one thing I heard from someone I was talking to is why not, every time this debate comes up, I mean, you have all these government schemes, right? I mean, I think the flagship covers you for 5 lakh rupees. Instead of regulating everything, you increase the amount for people who are eligible under this scheme, say from 5 to 10 lakhs.
Yeah.
So it's a more focused kind of approach instead of going for a one-size-fit-all kind of approach. Nigel.
All right. Hi, Param. Good morning. Good to see you. Well, Piyush Goyal has co-chaired, a meeting with the diplomats in UAE. What kind of a business opportunity could it throw up for the Indian pharmaceutical sector on the whole? Do you see any kind of opportunity coming up?
Yeah, so if you see, largely the large cap guys are largely dependent on the export side. So US continues to be a key market in that extent. But if you see, non-US also has been picking up, say Europe or ROW market. All these markets are been picking up for most of the guys. So gradually, I think that it's been picking up, but it will take some time. In the near to medium term, I think US will still continue to remain a critical role in terms of scaling of the business, specifically for the large guys.
Right, got that. Param, in your coverage universe, just run us through the top ideas.
So in the hospitals, we are very positive on the entire space. We are very constructive. I think the last 3 to 4 years, the growth was largely a function of say, sweating out the existing assets. I think from the next 3 to 4 year perspective, most of these guys are doubling, say adding 50% or 100% bed capacity in the next 4 to 5 years. So that will be largely the growth driver. So we are very constructive on the hospital space, and most of them we have a buy rating across the names on that. On the pharma side, I think the Revlimid thing, there is one more quarter, but I think Q3 second half of onward, I think Revlimid will go down. Most of these guys companies are investing in the complex generics, biosimilars, and say GLP opportunities. That will also play out, but unlikely to compensate the kind of Revlimid which has played for in some of the names. So in that scenario, we prefer names like Sun and Lupin in the large cap, wherein Sun is largely the play more on the specialty pharma. Lupin don't have any exposure on the Revlimid, but they have a very interesting US pipeline. So I think even on this base, they will be able to grow. So in the large cap, we are positive on Sun and Lupin. And on the slightly on the domestic oriented names, we are positive on Torrent Pharma and Eris Life Science.
All right. Param, we'll leave it there. Good getting those ideas from you. Appreciate you joining us, and thank you once again for being here. Well, I think we'll just quickly recap some of the stocks that we put out with regards to news flow, I mean, brokerage calls, etc., and how they've settled up at the end of the pre-open session. So Reliance, of course, is first up. Stock's absolutely flat. Board's approved fundraising for RBL Bank, which should come up 0.25% lower, nothing very much. New announcements, products, etc., 3.25% higher on Aether Energy. There's the acquisition from Zydus Wellness, stocks reacting about 0.75% higher. Order wins with NCC, and there was rights as well, so 2% and 1.25% higher. There's a MOU, PG Electroplast should come up. It's recovered about 100 rupees from the lows, so stocks up another 2% or so this morning, 543. And there are other stocks with news flow. IndusInd Bank, Vodafone Idea are some of these names which are coming up. There's also Aurobindo Pharma, which we highlighted, which will come up on your screen to give you a quick sense of how we are likely to start. Well, let's get to Nimesh now, who's standing by with what's the standout brokerage report of the day. Nimesh, take it away.
Hi, morning, Prashant. So today's standout is an Emphasis. Morgan Stanley has put out a note, and they've raised the target price on Emphasis to 36.25. They have an overweight rating, and they believe that they say that the company is positioning for a breakout. There are a lot of micro factors which are aligning for Emphasis going forward, and any macro support in terms of rate cuts in the US can further fuel the growth for the company. In fact, they see multiple re-rating triggers playing out in the very near future, which includes first, consistent pipeline growth. Second, size of quarterly deal wins are inching up for the company. Third, the diversification in terms of top 10 clients and BFSI is improving. Fourth, there is going to be if there is a consistent rate cut, there's going to be the risk of digital revenues falling will be eluded. And fifth, and not the last, one potential large shareholder can fully exit over the next 2 to 3 years, and that could mean how Coforge got re-rated. They expect something for Emphasis as well. In fact, Morgan Stanley has raised the revenue growth forecast for FY27 by 50 basis points and for FY28 by 100 basis points. So on back of all this, they have an overweight rating, but they've raised the target price now on Emphasis to 36.25.
All right, first rate starting to come up. Thanks very much, Nimesh, for that. We'll look at the indices and we'll look at individual stocks. 24,474 is where the Nifty is at. 53,824 is where the sensex is at right now. So 0.25% higher on the Nifty, about 1/3% higher on the Nifty Bank. Nifty Bank, of course, is the big underperformer. The small cap index is starting about 1/3% higher, and you've got the mid cap index, which is up 0.5%. So this is a much better start as compared to, of course, what we saw last week. And generally the trend that we've seen now for some time. Just the Nifty heat map in terms of how many stocks are up and down. So it's largely, 7-8 names are lower, but everything else is starting in the green. There is IT, which I can spot a bunch of names there. On the other end of the sort of spectrum is Tata Consumer, which is starting lower, but it's largely up and about this morning. 80 points nearly on the Nifty. Surbhi.
Okay, it's quiet and quiet, but with a positive bias, so it's not bad. Getting an 80-point pop. Movers on the upside. Infosys, IndusInd Bank, there's Trent, which is seeing some traction. Bajaj Auto, Power Grid, these are the stocks. So they're basically cutting across sectoral lines. But yes, IT is actually doing a little better. And remember CLSA's note, where they see perhaps higher levels ahead of some of these stocks. They're all up and about. Tech Mahindra as well, Wipro, there's some green on overall IT. L&T is continuing its good form from Friday. There's buying in Eternal, in Trend, so some consumer names as well. On the flip side, on the Nifty, you have Reliance, which is still a drag, and Balaji explained to us why. That this Jio, if the IPO happens without a demerger, then there could be a risk of a holding company discount on Reliance increasing. And therefore, that's putting pressure on the stock. Tata Consumer, HUL are some of the other weak names. But beyond that, it's a green-looking screen for the Nifty. So not too bad, 24,500.
Well, that's right. The big mover actually today has to be Torrent Power. They have won that LOA for a 1,600 megawatt thermal plant in MP. A couple of brokerages believe the plant can generate 15 to 17% IRRs. So that's why that stock, in fact, is up close to 3.5%. The loser on the downside actually is Sterlite Technologies, because the US subsidiary is facing a penalty that amounts to $96.5 million. So because of that, I think that's one of the big losers from the broader markets. The stock is much lower. Last time I checked, yes, it's still down close to around 5%. So big downtick is what we're seeing on that particular name. What else? A few more stocks actually that are coming on your radar. You have some strength that we're seeing in Godavari Power and Ispat. Stock is up close to around 4.5%. Samvardhana Motherson, that's up close to 2.5%. BSE, the stock has fallen one way from around 3,000 to around 2,000. Today, in fact, it's popping up close to around 2% in trade. So decent start, 80 points higher. Remember, we're looking at making a higher high from a bullish perspective. So that 24,572 mark becomes the important mark to track on the upside. But 100 points up, pretty good.
Yeah.
Absolutely.
Just adding one more stock to Nigel's list, Zydus Wellness. The market is receiving that UK acquisition pretty well. Stock's up 3.5%. This company called Comfort Click that they've bought it for about 240 million, which is, just a little under 2 times sales. The market seems to like it, for the time being at least.
Okay, well, lots happening, lots moving, and we will, of course, get you more as we go along in terms of individual names, etc. Well, I think for investors, there's a marquee conference which kicks off from today, which is the Motilal Oswal Annual Investor Conference, which is underway. We, of course, got you a preview of what the lineup is last Friday. But let's sort of get into it. Ramdev Agarwal is chairman and co-founder at Motilal Oswal Financial Services. Ramdevji, good morning. Great to have you with us here once again. Last we saw you was with the beautiful Kenyan background. And this is a nice background as well. Hustle, bustle, early morning, conference vibes.
This is completely changed. I'm really enjoying to be back from Kenya and straight into the conference. Thousands of participants, hundreds of companies, thousands and thousands of meetings. I think this next 3 days are going to be quite intense, and also it will set the tone for me to figure out now that wherever tariff and all things are. So what's really happening in the real economy, how the companies are taking it, and how hopeful they are about the so-called avalanche of reforms which the government is promising. So I think there is a lot on the agenda, and days are ahead.
Yeah, from lions and cheetahs and giraffes, different kind of crowd, right? But all looking for ideas in terms of different kind of food, stocks as food. Now, but there's so much, right, on the table. The only thing is, what do you really, it's so many moving parts. There's always moving parts, but I guess this time especially more so. But would you imagine the crux at the end of the day for investors, the bottom line is going to be to find which are the companies where there is a little bit of predictability and sustenance of earnings growth, decent earnings growth in these volatile times. Do you think that's going to be the ultimate aim at the conference?
Yeah, I think Buffett or somebody said, uncertainty is the best friend of the long-term investor. Okay, so right now we are in the midst of uncertainty, and now you need a very clear thinking about how to invest. I mean, in investment candidates, what all you are looking for. And this uncertainty leads to a lot of mispricing of very good stocks because there could be some very short-term challenge of 2-3 months, 4 months. People might come and dump it, and you might be able to get it at 30, 40, 50% cheaper. So what is important at this juncture is to really have a deep thinking and have a very clear strategy, what kind of stocks you like and are they available now at your prices, So it is quite possible those companies are available at a depressed prices. So this is a great time for the investors. I don't know how good it is for the traders, but definitely a great time for investors for stock picking.
Oh, absolutely. Investors can at least apply their mind. Stock prices aren't running away to, stratospheric heights. So perhaps it's easier to pick good businesses right now. Thanks for joining in, sir. My question to you is more on one of these big ticket reforms that's almost happening. I mean, the meeting is this week, the GST Council meeting. And it's pretty landmark. I mean, what they're talking about, a lot of items moving to 5%, many moving from 28% to 18%. The market's reaction to it after the initial pop, I mean, after 15th August speech, we had that initial pop, and then the market went a little thanda. So do you think it will eventually start leading to a bigger move around the festive season when the cuts really kick in? Or is the market concerned about something else? And, there's a GST meeting and then there is a GDP number, which was also very, very good, even if you remove the technicalities aside.
Yeah.
But again, market is a bit thanda. Well, why so?
Yeah, I think it is that this tariff issue is all over. I mean, if you see even the PM's visit, everything is colored. I mean, this visit is also colored with the tariff issue with the America and all. So I think there is too much of right now noise, not so much intelligent argument, but there is a lot of noise about this issue, and everything is clouded by one particular issue. And it's not that this is final forever. There is going to be negotiation, there is going to be a deal, and maybe in next 10, 15 days, 1 month, there is going to be a deal between India and America. We are long-standing partners. There will be a deal. What will be the deal? I don't know, but it will be far better than what it is right now. So uncertainty will get cleared at some point of time. So a lot of things are going to happen, but right now that looks to be overriding. It's the nature of the market. They need one headline, and for 10-15 days they will talk about it, and after that they'll move on to the next one. And whatever happens in the first one, nobody's bothered. So I think as the GST thing comes closer and actually people come to know that 28 is abolished and it has come down to 18%. So you look at some auto companies, particularly where the demand is very sensitive to the price cuts, say like motorcycles particularly. Say if it comes down from 28 to 18, I mean, you could see massive surge in the demand. But since it has not happened, it is very difficult to figure out whether it will be 20%, 30% jump, or will it be just a muted kind of situation. My sense is if it is honestly implemented from 28 to 18 for motorcycle companies or entry-level car companies, I think automotive will be one of the segments to watch out for in next 1 year. But since it is not done, nobody believes these kind of reforms can happen. I think markets are skeptical, and then on top of it, this tariff thing is also playing out.
Hi Ramdevji, good morning. Good to see you. When the problem with regard to this Trump's tariff tantrum is that it's become a reality. So that's an issue, right? Because it's hurting sentiment. And I think that will be the single biggest trigger just in the near term to help those animal spirits to come back. But if we don't get clarity, say in the next month and a half or so or thereabout, it'll continue to weigh on the markets, right? Difficult to move up when you have only 10% earnings growth, you have this tariff issue and uncertainty. What is your take, sir?
Yeah, Nigel, it is not about one thing. There is you always get a package deal in the economy. You always get a package deal. You have the GST coming in. You have the government has so many powers of non-financial reforms also. I mean, there can be things on education. There can be things on tourism. There can be things on judiciary, on a home front. I mean, see, it's not everything is linked to just tariff and kind of GST and things like that. So I mean, let's see when the PM comes back in next week from all his tours, what kind of energy he brings in and what kind of avalanche of reforms they unleash. So I would remain a lot more optimistic about how things are going to shape up, even for earnings. You see, just yesterday, all the economies, they are wrong by 1.1% for a quarter. I mean, the GDP grew at 7.6%, where the expected was about 6.5. I mean, consensus was 6.5. Even your biggest of the bank economies, they were at 6.5. And here comes a number which is 7.6. So I think we don't know everything. And this momentum is big. This 7.6 has come without full flow of the credit, without full flow of the fiscal concessions, without full flow of the rate cuts, and now the promises of GST cuts and all. So there are a lot of emanations to counter. If there is anything, of course, 50% tariff, if it becomes long term, it is going to hurt the trade. But the trade itself will find its way, and I think the economy is just not slave to just this tariff. So I think we have to be much more calibrated, and it's a good time that market was a little overpriced. Global markets have run up big time, so we have underperformed in the current year. So now the corrected market, or I would say steady market here, thanks to the massive flow we have, domestic flow, is holding it here, and it is an opportunity for the long-term buyer to look at some of the opportunities.
Mr. Agrawal, just a question, sir. Is the market currently underpricing the positives that we've seen in the last 2-3 weeks? GST cuts, GDP, build up ahead of festive season. Is the market underpricing it because it's in a bit of a negative sentiment state of mind? Or is it right in the wait and watch approach?
No. Surabhi, you just see the pace at which the foreigners are selling for whatever reason, and domestics are countering that. So if it was not for the domestic flow, you imagine what would have been shape of the market. I mean, if you sell $1 billion in a day, cash, what would the shape of the market? Market cannot absorb that. But just that we have a much bigger flow from domestic. I think last month was a record. In August, DI itself has bought almost 1 lakh crore. I mean, at least that is what the SEBI number is saying, that 96,000 crores have been bought. It's a record in itself that in 1 month we have bought a lakh crore cash. So I think we must not undermine. The biggest force, I would say, are two things. There are two biggest forces. One, the sustained flow of domestic flow and participation. The GDP is rising, and that's my main presentation today. India, the multi-trillion-dollar opportunity. So if you go through the presentation, the GDP is growing, savings are growing, and on top of it, participation is growing. So this combination of both is just explosive in terms of demand for the paper in the economy. Now, just because there is a demand for paper, stock markets are not going to go up. It is going to go up when the economy does well and when the earnings start climbing, which is what we expect in the second half of the year, or particularly the next year. I think we are going to see bumper increase in the earnings by maybe 15, 17, 18%, depending on the slew of reforms which is implemented.
I was just thinking, Ramdaji, I remember when a year and a half back, the situation was exactly the opposite. Local flows were very strong and FIs were also buying. And then I remember somebody, I don't know who it was, said, well, if this continues, there will be, prices will go berserk. I mean, they won't make any sense. Because mutual funds will get money, they'll have to buy. You can't sit on the cash. So you need supply, supply of paper. So it's always, I mean, a bit of this, a bit of that, right? I mean, depending on where you are at. So a couple of questions, Ramdevji. One, just to go back to the conference, what are you, apart from your own presentation, who are you most excited to listen to? I mean, just give us 2-3 names or 2-3 sort of, the things at the conference.
So that way, I mean, it's a full, I mean, it is designed always. I mean, the organizer, they sit with me and they ask me, quiz me, which are the sectors or what kind of themes you would like to see. So, one of the things I was telling them was about AI. So there is somebody who is presented from McKinsey about the AI actual impact. How much is hype and how much is the real impact? That's what, because AI is continuously evolving so rapidly, trillions of dollars being spent, and we have no idea from where the earnings are going to come. So is it a hollow hype, like what happened when the internet came first in 2000, and then it leads to a complete collapse? Or is it earnings supported? I mean, it is going to have a huge impact immediately on the earnings of the corporates globally also. And hence that trillions of dollar investment is good. So that's one theme. Second is about the real estate. So I think Abhishek Lodha is presenting on that. We are talking about quick commerce. I think Adit Palicha is the thing. So like that, every single slot has been, even, and I think one of the most coveted participants would be our Commerce Minister, Mr. Piyush Singhal. So Piyush Goyal. So I think, so there is all this, I think 16 or 17 CEO tracks have been very, very well curated to represent one issue or other, which is there in the top of the mind of all the investors.
Ramdevji, I think Prime Minister Modi is speaking right now. Stay with us. We're just going to cut across to it and come back.
एसईओ को लेकर भारत की सोच और नीति 3 मुख्य स्तंभों पर आधारित है। एससीओ, एस सिक्योरिटी, सी कनेक्टिविटी, ओ अपॉर्चुनिटी। पहले स्तंभ एस यानी सिक्योरिटी के संदर्भ में मैं कहना चाहता हूं कि सुरक्षा, शांति और स्थिरता किसी भी देश के विकास का आधार है। किंतु इस मार्ग में आतंकवाद, अलगाववाद और अतिवाद बड़ी चुनौतियां हैं। आतंकवाद सिर्फ किसी देश की सुरक्षा ही नहीं बल्कि पूरी मानवता के लिए एक साझा चुनौती है। कोई देश, कोई समाज, कोई नागरिक अपने आप को इससे सुरक्षित नहीं समझ सकता। इसलिए आतंकवाद से लड़ाई में भारत ने एकजुटता पर बल दिया। इसमें एससीओ रेट्स की बहुत महत्वपूर्ण भूमिका रही। इस वर्ष भारत ने जॉइंट इंफॉर्मेशन ऑपरेशन को लीड करते हुए अल-कायदा और इससे जुड़े आतंकी संगठनों से लड़ने का इनिशिएटिव किया। हमने रेडिकलाइजेशन के विरुद्ध समन्वय बढ़ाने और मिलकर कदम उठाने का भी प्रस्ताव रखा। टेरर फाइनेंसिंग के खिलाफ आवाज उठाई। इसमें मिले समर्थन के लिए मैं आभार व्यक्त करता हूं। एक्सेलेंसी, भारत पिछले 4 दशकों से निर्मम आतंकवाद का दंश झेल रहा। कितनी ही माताओं ने अपने बच्चे खोए और कितने बच्चे अनाथ हो गए। हाल ही में हमने पहलगाम में टेररिज्म का बहुत ही घिनौना रूप देखा। इस दुख की घड़ी में जो मित्र देश हमारे साथ खड़े रहे, मैं उनका आभार व्यक्त करता हूं। यह हमला केवल भारत की अंतरात्मा पर भी आघात नहीं, यह मानवता में विश्वास रखने वाले हर देश, हर व्यक्ति को खुली चुनौती थी। ऐसे में प्रश्न उठना स्वाभाविक है, क्या कुछ देशों द्वारा
Okay, that's Prime Minister Modi. Important comments coming in from, of course, he's in China and is due to fly back today. We'll, of course, have it on the side of the screen and continue to put out the flashes in terms of what he's saying. Ramdevji is with us. Ramdevji, you know, that those comments coming in from the Prime Minister. Two questions. I mean, so you outlined the themes and the sort of, speaker track list, what you most actually started with AI. So I just have two questions. One, is there a AI play in India? And this is a piece I did some time back. Most large markets have, and this is where global interest is at an all-time high, right? Maybe it's a bubble or not, we don't know. We'll see. But some of, actually, it's just food for thought. Lack of AI plays perhaps also reason for foreigners, lack of interest, enthusiasm. That is one. And second, you began by saying that this is the time to be opportunistic. So is there a watch list for you, and what's on that watch list? Go on.
Yeah. So clearly, I'll tell you one thing. AI or no AI, of course, you need some iconic things to happen in the market for the attention to be drawn for these foreigners. But actually, the sustained high earnings growth rate of about 12-13%, that's sufficient. Whether it comes from even oil companies, whether it comes from steel companies, whether it comes from retail companies, consumer companies, the issue is that we have had a slowdown in the earnings, and the reasons could be many. It could be a slowdown in the credit flow. It could be inflation. It could be high interest rates. I mean, there could be multiple things. It is for me. I'm not a macro guy to figure out why it happened, but definitely there was a slowdown in the earnings in the last 2 years. Once the earnings growth picks up to say 12, 13%, 14%, I think your P multiple, aggregate P multiple, which is at about 22, that will start coming down, and that will make it. And good thing is the rest of the emerging markets, they are on the boil, and particularly China. So I think the gap between China and India P multiples, which is at about 16 and 22 right now, if that goes down a little more, say we stay 22 or 20, and they come up to 18 or so, I think there will be natural flow of the money into the market from foreigners also. So let's not bother about whether there is an AI play or not. And maybe right now, AI plays, pure AI plays in India would be in more of a private equity space, unlisted, very small. They are trying out. If you see today's paper, there are a lot of AI startups which have been encouraged by the government, and awards have been given. So I think we will find our way.
We'll wait for them. We'll wait for them. We'll wait for them.
You have to wait for them. Yeah.
Yeah. And watch list, Ramdevji.
Yeah. So I'm looking for, since I don't invest directly, my asset management company, the fund managers, they are looking for the ideas. And the theme of the asset management company at our end is high quality, high growth. So within QGLP framework, they are looking for high quality, high growth companies. And because the moment high quality, high growth comes together, market tends to misprice them. It looks 30p, 40p, but then if the company is growing at 50-60%, I think there is always a potential for them to rise in terms of prices and beat the markets. So I think index composition, if you see, is slowly changing. In next 10-15 years, you will see a lot of internet-based companies which are growing at very rapid pace of 50-60%. They will come, despite the fact that they may not be earning today much, but their market caps are high, and they would become prominent contributor to the market caps in the indices, and eventually also very high quality earnings to the index. So I think Indian indices, Indian market is also undergoing change in the changing landscape of the kind of corporates which are going to make money.
Absolutely. Finally, sir, like you've taught us and like how we've learned, there are only two things you need for a bull market. One is strong earnings and the other is obviously strong liquidity, right? So on the latter, I'm just curious that in the conference over the next 2 days, what's the mix of investors like? Is it largely local Is it, and in local, what kind? Is it family offices? Are you anticipating to see some foreign clients as well? What are you expecting from the mix of the investor base? And the questions that they'll probably have, also for the companies. Yeah.
Yeah, so actually it is a very good mix of FIIs. A very large contingents of FIIs are coming from Hong Kong, Singapore, London, from these places. And then on top of it, you have now actually importance of domestic mutual fund is paramount. Our own mutual funds are now, we are talking about 3 lakh crores, 5 lakh crores, 7 lakh crores of equity. So these are the real gods of Indian equities. So we have, of course, they'll be fully represented here. And there are hundreds of companies who are coming between 3 days. So they'll all come at different point of time. But I would say the most important segment is the domestic mutual funds, insurance companies, so DII so-called, and then of course good mix of FIs. They are trying to see what kind of mood is here. And we are getting guys from Taiwan and Korea and some far-flung places I have never even visited. So, yes, there's a lot of interest from the foreigners. Yeah, but allocations are small compared to what DI can do.
So we're looking forward to the next interview, which will probably happen from these far-flung places in the Far East, right? We'll have another beautiful backdrop with Ramdev ji and more insights as always.
Yeah.
Thank you. Thank you so much, sir, and good luck for the conference.
Yeah.
And we'll of course catch you there over the course of the next 2 days. All right, well, with that, let's turn the spotlight on the big headline that came in on Friday evening. It was a very positive headline. GDP numbers for the first quarter coming in at a much higher than expected. The number finally that came through was 7.8%. Most estimates were ranging between 6.5% to about 6.8%. So to talk about this and to figure out how to understand and interpret this big number, we have with us Pranjal Bhandari, Chief India Economist at HSBC, and Sameer Narang, Head Economics Research Group at ICICI Bank. Pranjal and Sameer, thank you so much for joining in. So, we were just speaking to Lata about this, and we understand that, yes, there was a deflator issue at play because inflation is so low, whether you're looking at CPI or WPI, so therefore the deflator is low, so the number optically looks higher. But my point is, I think everybody knew this, right? And economists would have baked this into the estimates, and yet the beat is almost a 1% beat. 100 basis points beat above most of the consensus estimates. So, Pranjal, let's open with you. X of the technical implication, what is your assessment or what does this number tell us in terms of the actual growth and buoyancy in the economy?
Yeah, thank you very much. So look, our forecast was just north of 7%, but not as high as 7.8%. There is a deflator issue out there, and we have tried to quantify it. I think it has overstated both industry and services. Our census by about 1 percentage points. So if we shave that off, our census real GDP growth number is closer to 6.8% and not 7.8% that was announced. And even this 6.8% number, is a strong number. India's potential growth, its ability to grow is about 6.5%. So if you have a number which is higher than that, that's actually a good number. And there were a few good things that happened in the quarter. I think consumption was strong, both government and private sector. The government, both center and state, have front-loaded some of the expenditure. And when I look at consumers, I'm finding that there has been some increase in the informal sector. Look, at the end of the day, with oil prices falling, inflation falling, purchasing power rising, rains being good, my sense is that the rural India and the informal part of urban India have actually been beneficiaries. And I think that did show up in the number. So I think it's safe to say right now that on the eve of the 50% tariff, actually India's growth was pretty decent, close to about 6.8% when we take off the deflator boost.
Got that. Pranjal, good morning. Sameer, good morning. Sameer, your first thoughts in terms of what you made of the numbers and what have you done to your own estimates post this beat?
I agree with Pranjal. Deflator had a role to play. Also, the fact that both center and states have front-loaded their capex by quite a bit. So if you put them both together, both center and states in aggregate spent around 3.8 lakh crores in the quarter, and nominal GDP is around 87 lakh crores. So, a number in excess of 40% there. implies almost a 2 percentage point boost to growth just because of front-loaded government capex. Over the next few quarters, this boost will not be there because for the year, the government is likely to spend around 10% on capex in the year. So in the subsequent quarters, you're likely to see much lower government capex, and that is likely to impinge on growth, along with lower exports, which have been weak in general, apart from exports to the US. So in aggregate, what we have done to our estimates, given this macro backdrop, is that we revised our estimate to 6.6% from 6.3% earlier. For the next 3 quarters, growth will be 6.5 or thereabouts, or 6.7 in Q2. But then it averages around 6% in H2. So for the year, number is around 6.6. Not a bad number given the global backdrop.
Pranjul, what does this do to rate cuts? I mean, a second rate cut in October, chances of that?
Look, my sense is that RBI is going to continue to cut at this point of time, given the growth drag that comes from the 50% tariff. But it may not happen as soon as October. I myself have it penciled in for December. And the reason is that by the time we have the October policy meeting, we won't get a lot of the slowdown data. Most of the slowdown is going to happen in September, and the data will start trickling in from the middle of October. So on the 1st of October, when the RBI meets, it may not actually have all the data available to claim that this is a growth slowdown and, they're going to be cutting rates. So I think we'll have to wait for a little longer. And I think that is what, in a way, the bond market is fearing at this point of time. The fact that, there is no easing, which is in the horizon very soon.
All right, got that, Pranjal. Sameer, coming across to you, what are your expectations with regard to the RBI? We are thumping the table. Yes, the Q1 print was good, but then it doesn't give us, from an equity market perspective, maybe that rate cut that people were sniffing may not come about. How do you expect the RBI to move going ahead?
No, I think, Nigel, I agree. Our view is that we don't expect a rate cut in this financial year anymore. Basis what is happening on the growth front, number one, in Q1. And in H2, though we expect growth to slow down, but it's largely driven by exports. Domestic economy, because of the GST rationalization and the proposed cut, will see a big rebound in consumption, particularly from September 22nd onwards, when the new rates will be applicable and the Navratras start. So we believe a bumper Diwali ahead, and that would make sure that RBI holds back on the growth front, because domestic economy should be doing well. And on the second part is that we do expect inflation also to pick up. Our numbers are pretty much in line with the RBI's at 4.5% for March quarter and 5% for the next year, Q1. So overall, we expect inflation around 4.7%, but with GST rejig, it could be 20 basis points lower than that. So 4.5% is where we see next year's inflation. On back of that, we do not see RBI cutting rates in this financial year.
All right, Sameer, what about the second quarter? If I look at the trends, whether I look at the movement of cement via rail or the auto sales as well, that's likely to take a temporary hit, because of wait for clarity on the GST rates. So that's when in the near term, we'll like to see some kind of pausing in terms of purchases. So Q2, do you think will be an absolute washout?
No, Nigel, we don't think so, because July has been a good month. Manufacturing growth is around 5.4% that the number came in. August also should be okay, because the impact of the tariffs will be felt in September. And by end September, we expect the domestic economy to be humming by 22nd of September. So maybe 3 to 4 weeks, there could be somewhat of a lull. But I think there will be an inventory stocking ahead of the festive season, when demand should be much more than normal because of the GST rejig. So overall, we believe for the quarter, we should be around 6.5%, if not more. And the deflator will play a bigger role even in the next quarter, when WPI is actually running negative right now.
Okay. And Sameer, you said for the full year, FY26, you're at 6.6% GDP growth estimate, right?
Yes.
Okay. Pranjal, same question to you. I mean, your growth expectations for the full year, how do the final numbers now stack up? And what are your expectations from festive season? Clearly, Sameer is very, very optimistic. He's saying it's going to be a bumper Diwali, and it'll probably help mitigate the tariff impact as well. But your thoughts on the way the GST cut will play out through the economy?
Yeah, I think there's going to be a big difference between growth on the ground and official GDP numbers. And I think that's going to keep the markets a little confused. My sense is growth on the ground for the FY26 fiscal year will be about 6.3%, but the official numbers, because of the deflator problems, could be closer to 7%. It could be like 6.8% or so. And I think we have to live with this at this point of time, that there are going to be two vastly differing numbers and two vastly differing sentiments around GDP in the economy. In terms of how growth feels in the next couple of months, I'm going to agree with Sameer that July and August looked pretty good. So we were good on the eve of the 50% tariff. But I think September is going to be very weak, not only because new export orders are likely to fall, but also we're going to see some of the postponement of GST purchases. Beyond that, some of the fiscal spending may also come off because a lot of state governments have front-loaded spending. So I would say that we could see some softness on the ground for several reasons in the next couple of months. Will GST help? On the margin, it could. But there's one thing I'm going to look out very closely. Is it going to be revenue neutral or not? Because if it's not going to be revenue neutral, it means that rate cuts in some items will be compensated by rate hikes in some other items. And then we have to be very careful. Is the net impact going to be positive or not? So we'll wait for this in the next couple of days. I think there are important GST meetings. But for me, the one thing to watch out is it revenue neutral or not?
Oh, very extremely valid point out there, Pranchal. So we'll have to keep an eye out with regard to clarity on that. But final question to you, Pranchal, before we let you go. What about the Indian rupee? Post the S&P upgrade, one would have expected, some kind of cooling off in the yields, bond yields. That hasn't really happened. The rupee as well has slipped. What's the trajectory? Because money market is the lead indicator, right? And, that was looking a little bit weakish. So what levels are you working with out there?
Well, look, at the end of the day, if you have exports to the US falling quite a bit, the trade deficit will widen. And we're already seeing that capital inflows have not been very strong. We have net FDI, which is not growing at a particularly impressive rate, and portfolio inflows are uncertain. So all of this, makes it very uncertain on how the rupee might behave, going ahead. So I think we'll have to work with the weakness that we are seeing at this point of time. In terms of bond yields, look, my sense is that if fiscal can broadly remain in check, if GST is broadly revenue neutral, inflation is low, I think RBI is going to cut more. The sentiment should overall turn positive at this point, at some point, but it's not now. Right now, I think there's this big risk aversion across all asset classes, which is dragging down, everything, equity markets, the rupee, and rates. But I think once the dust settles, I would imagine some parts of the bond yield will start looking attractive again.
All right, Pranjul, Sameer, we will continue this conversation and continue to ask you as things develop, right? I mean, as both of you agree, the impact of these tariffs, of course, will take some time to show up, but show up they will, unless, of course, something gets worked out very, very quickly, and these additional 25% tariffs go away. Thanks, both of you, for being here on the program. We'll come back with Jairam Sampath of Keynes Technology. He'll be with us to discuss demand trends and their F526 outlook. Stay tuned, coming up.
Welcome back. It's actually a pretty decent morning. I mean, these days when you get a nice 0.5% upward drift on the index, 100 points up, it's nice and steady, looks good. Actually, the mid-cap screen is looking even better. Look at the mid-cap index. It's up almost 1.5% now, and we have a very positive advance decline ratio as the day kicks off. Well over 2,000 stocks advancing. So it's a really, really good looking screen. I just want to pick out actually some names since there is momentum and some buoyancy building in the market. Look at a Garden Reach Shipbuilders, 5%. Ola Electric, which has been absolutely electrified in the last 1 month, stocks up 40% in the last 1 month. It's up another 7% this morning. That's Ola. You just saw Garden Reach Shipbuilders. Zydus Wellness on the back of that acquisition is still building on those gains, 4-5% up on Zydus. Rate gain, 5.5% up on rate gain as well. So there's plenty going on in the market, and the mid-cap screen is looking really good. Actually, on that note, let's bring in Vamakshi. She is watching out for power stocks specifically. Vamakshi, morning. What are you looking at?
Well, good morning, Subhi. Taking a look at Torrent Power, there is a note that came in from Morgan Stanley. They have an overweight call on this counter, target price of 1,444 rupees. And this is on the back of an LOA that the company won for almost 1,600 megawatt thermal plant in MP. They believe that the plant can generate an IRR of almost 15 to 17%, assuming a 70 to 30 debt equity ratio. They believe the capacity charge could range between 4.1 to 4.3 rupees per unit, and they have also highlighted that the balance sheet has enough headroom for growth with current net debt to EBITDA of 1.4 times and net debt to equity of 0.4 times. So they appear to be quite bullish on this particular counter. Let's also put the spotlight on CG Power because there is an initiating coverage note from Morgan Stanley. They've initiated coverage with a buy call, target price of 799, and they say that the company is among India's most diversified capital good players. They say that the company has a strong presence in manufacturing, ranging from motors. It also is a beneficiary of strong growth in power, which includes transformers as well as switchgears. And the company is also aiming to build capacity in critical sectors like semiconductors as well as railways. So what they're highlighting essentially is that the company is a very diversified capital good player. Other than that, they believe that the industrial business revenue is expected to grow between 14 to 15%. The power systems revenue could see a growth CAGR of almost 35%. And semiconductors, the peak asset turnover here could be 1.9 times by FY31. So they appear to be quite bullish on CG Power as well.
Okay, all right. Thanks a lot for that, Vamakshi. Well, as promised, let's move on to our next management, Kaynes Technology. That's the company on our radar. We're now joined by Mr. Jairam Sampath, the whole-time director and CFO of the company, who joins us on the show. The key focus points of this conversation will be basically three broad themes we're looking at. The AMX sector amid the India-China talks, India's semicon boom and the key players in the value chain, and the OSAT business outlook. That's going to be important. Well, Mr. Sampath, thanks a lot for joining in, sir. Let's focus on the OSAT business first. When will it be commercialized? I believe the facility is almost up and running, but revenues will start coming in from Q4. So could you confirm that? What kind of revenue recognition should we see from the OSAT facility in 26? That's only Q4, I think so. And in 27, what should it look like?
Yeah, so certainly significant revenues will happen in FY26. Already the pilot plant is up and running. We have in the process of producing samples and getting it approved and so on. So hopefully we'll be off the block first, if I'm not mistaken. And then, of course, there are two other clients lined up. So there are three major clients lined up: Alpha Omega Semiconductor, Fujitsu L&T, and also Infineon. And so we have our hands full right now for the next 2 years or so, when we establish production for all these clients and some more. And so it's on schedule. Pilot plant is already ready. The main plant is also coming up. Maybe in a month's time, it will get outfitted with machinery and so on. So we hope to announce the shipments as soon as possible. So the first set of shipments will go for testing and all that, and commercial supplies will start in the Q4.
Yeah, that's what the company had indicated earlier as well, Mr. Sampath. So it's good to know that you're on track with those timelines. So that's the first headline, that commercial shipments of chips from your OSAT facility will start in Q4 of the current year. Yes. Some sense, sir, on what this may mean for the company's revenue. I understand it will take time to scale up, and these are only the pilot lines, I think, that are currently ready. Yeah. But how will this revenue, your semiconductor revenue, scale up from Q4 going into the next couple of quarters?
Yeah, so earlier we had put a small, let's say, structure to this revenue. We said we do about 1,500 crores by FY28. So we might increase beyond that too, because what will happen is that this year and FY27, we'll do bulk of the investments. And the first phase, which is legacy packaging, wire bonding, and all of those things will probably be up and running, and we'll probably start working with some of the advanced packaging too. So by FY28, I think we should get significant number up, even beyond what we thought earlier. Earlier we had set a target of about 1,500 crores. We might even exceed that in FY28 in semicon business alone. Yeah.
Okay, all right. So, recently Keynes, they've committed, I think, around 50 billion for the PCB project in Tamil Nadu. Could you tell us what is the plan out there?
Yeah.
Will it be if you're funded via the current QIP money, or or is the company planning any fresh issue to fund this plan there in Tamil Nadu?
Yeah, let me just clarify that.
Yes,
so 1,400 crores, which is 14 billion rupee, already committed, and we have raised funds through QIP. It's funded, 65% of the CapEx is funded by state and central governments. We have government order to that effect, and then the remaining we put in as equity and a little bit of transient debt. Then the remaining 3,600 odd crores is for a new project, which we have signed a non-binding agreement with the state government, and we are awaiting their government order on how much of, let's say, subsidies that they will provide. So we expect a similar, and if not more, maybe about 65-70% under the CMS plus the state government subsidy. And so the remaining portion of it, we think that the first set of investments that we have done will start yielding cash in a couple of years' time frame. So some of it will be put from there. And so we don't think we will raise any further major quantum of funds, though. And this project is for prepeg and copper-clad laminates, and it's at a different location. It also augments capacity of our PCB plant too. So it may take its own 2 to 3 years time frame beyond the 2 years that we require for the Chennai plant to come up. So yeah, so that's the actual status. So 3,400, maybe 65-70% through subsidies. The remaining we will generate from our PCB business, and also, if necessary, a small bridge loan also we might take.
Okay, got that point. So now we need to understand the implications of all the tariff changes and what's going on in terms of just global realignments, right? So let's start by understanding what you've told us earlier. You said that your exports could go up to 25% of the total revenue pie by FY27. Now, how much of that is going to be dependent on exports to the US market? And currently, I mean, because of that specific section, I think electronics is exempt. And I'm not sure if all categories of electronics, I think some categories are exempt. But tell us, are all your exports currently exempt from the tariff?
Yeah.
What happens if they come under the tariff?
Yeah, the HSN code 8541, I think broadly by and large where we operate is completely exempt from import tariffs there. But then we are talking about situation as announced now. So we think that the semiconductor exports will probably not be directly to the US, but they'll be more to their warehouses outside of India, like maybe Singapore, Hong Kong, and other places, maybe even Taiwan, etc. And similarly, PC board also will be, PC board, some of the exports will be probably to Europe and maybe Japan, and then bulk of it will come to India too. So we don't see any major disturbance due to this tariff structure. It is just that it is causing a bit of anxiety among the, let's say, investor community more than the production people. And what we hear on the ground is that people are now, they have put in place long-term measures to move alternative production, to create alternative production sites in India as compared to China. And these moves earlier, only the American companies are contemplating. Now it's European companies, Korean companies, and Japanese companies. This plus one has become a little, so I don't know whether it was intended or not, but the entire thing is benefiting us now.
But and exactly to round that up, a little short on time, maybe we'll have a longer conversation on this later. But on this China plus one, and now we are engaging with China. Now, as an electronics manufacturer and someone with large export aspirations as well, does that at all worry you? We don't know what shape and form eventually this bilateral, trade ties with China will take. But if India decides to open up in some way the electronics sector, I mean, I don't know, that would be a cause of concern for you, I believe?
Yeah. So what will happen is, see, this gives us a unique opportunity to take the best out of the Western markets, which are like revenues, and best out of China, which is like technology and inputs. So I think we've got to be cautious about what we do. But I think all in all, it is beneficial to have good supply side relationship with China. and a good sales side relationship with the rest of the world,
Okay. All right. Very quickly, sir. FY28 and FY30, you had given some ballpark PAT guidance. Could you just reconfirm that? What is the outlook? Because currently you're doing just 400 crores of PAT. Market cap is close to around 40,000 crores. But the street believes this 300-400 crores of PAT can go up substantially. So for FY28 and 30, what is the number?
FY30, we said about $2 billion is the kind of number, and maybe about two-digit PAT at 11%. So 11% of 18,000 crores is what we think we'll hit at the minimum. Of course, we think that it might be north of that too.
So around 1,800 to 2,000 crores of PAT by FY30.
Minimum, yes.
Got it. All right. Thanks a lot, sir, for joining in and filling us in with all of those details. We look forward to having a chat with you and see how things are progressing on the OSAT front, on the PCB front, as well as on the core EMS business. That said, well, let's get back to the technicals of the market. Nagraj Sethi is back with us. Hi, Nagraj. Good to see you in. Good start to trade, at least today. Markets are holding with gains. What are the levels you are looking at, and what's the fresh trade?
Hi, good morning, Nigel. Yes, the market has bounced back after a few sessions of decline, but still, I think markets are not out of woods. Though this bounce back could face strong resistance around 24,700 levels. If Nifty sustains about 24,700, then one may expect some more upside towards the near term. I think there is a possibility of Nifty rebounding from the highs towards the support of around 24,200 to 300 levels, which is a strong cluster support with regards to previous swing lows, 200-day EMA, as well as the previous gap area of May 25. So in terms of stocks, I have a couple of stocks on both sides. One is from a short and one is from a long side. From a long side, granules, the Chartically granules has bounced back very well recently in the last couple of sessions after a consolidation. Currently moved above the 200-day EMA hurdle. Right now trading around 514.5. One can look to buy at this point of time. The upside target would be around 545. One can place a stop loss at 499. Second one is from a short side. OMCs, especially BPCL, was showing some.
Oopsie. Okay, all right. I think, that line snapped out there, but BPCL is the one that Nagraj wanted to talk about. We'll try to get him back for the time being, slip into a short break, come back, continue to focus on markets. Stay with us.
Welcome back. So the equity market is having a good morning, currently 100 points up on the Nifty. Let's find out what's buzzing in commodities. Manisha is here with us. Manisha, what's capturing your imagination this Monday?
Well, there's nothing left to imagination really with the kind of gains that we've seen, especially coming for the precious metal prices. I mean, you have to take a look on the kind of run-up that we've seen in both of these. So gold is just very close to that $3,500 an ounce mark, which is an all-time high that the gold prices saw in the month of April. For the Indian markets, we're trading at an all-time high at around 1,05,000 rupees per 10 grams. So it has been a one-way rally that we've seen happen in case of 2025. And it's not just about gold. Take a look at silver prices. 2% of gains in Asia right now. And we've crossed above that very important psychological mark of $40 an ounce. For the Indian markets, it yet again is an all-time highs for the silver prices also. That is because rupee has continued to decline. 3% down in this year, a worst Asian performing currency, and that has led the Asian prices or the Indian prices quite on the higher side. This is what we've done in sense of gold prices in the last many years, and I've taken a 5-year gap as I put this chart across for you. In 2005, you had gold prices trading at around 7,700 rupees. This is per 10 grams. And then we've seen prices continue to gain very, very strongly. Last year, we were trading at around 75,000 rupees. This was the price that you saw in the markets there. But this year, we are trading at 1,05,000 rupees. 2020, the prices were at 50,000. And as you can see, between 2010 and 2015, the gold prices did not move so much. It was a year of consolidation in those 4 or 5 years. But then 2015 to 20 to 25, it has been doubling every 5 years when you look at the gold prices therein. Take a look at that in sense of percentage terms as well. In the last 5 years, we've seen prices decline only once, and that was in 2021. And the kind of gains that we're looking at in sense of gold in 2025, gold clearly has been the best performer in last 5 years in that sense. So 2025 really going forward as the best in 5 years in case of gold there. The last 4 years have given you very strong returns continuing. 2024 was strong gains as well. But this is the year that we've seen string of all-time highs starting from the month of Jan itself. And it's not just about gold. Take a look at the silver prices. We've seen very strong gains come in for this one as well. And as you can see, it has been doubling up every 5 years since 2015, same as the way gold has done. We were trading at around 33,000 in 2015. That was 10 years ago. 2020 was 68,000 rupees, and currently we are trading at 1,23,000 rupees a kg. It has been very strong gains that you can see in case of silver as well. This is what we've done in sense of percentage terms, and silver, this is the best performing year in last 7 years when you look at silver as well. The negative day return was in 2021, but then as you can see, since 2022, it has been a string of positives, and 40% of gains is what silver has given you in 2025 till time. We still have 3 or 4 months to go, but silver price is clearly on fire here. Well, the major reason for this is, one, you have expectations of a US Fed rate cut in the month of September. There is decline in the US dollar index. The markets are looking at a lot of uncertainty, and there is some safe haven buying because of that as well. So while the US court has ruled Trump's global tariffs illegal, but it's been kept until October 14th. So that is something that the street will watch out for. And then when you look at the gold and silver ratio, that has been supportive. The US inflation data has boosted expectations of a Fed rate cut at least twice in this year. That clearly has been supportive. And the way the markets are slowing down, the economic data has been on the weaker side, not just in China, but in US as well, has been supportive as well. And then the markets have seen very strong investment demand, whether it comes in from central banks, from retail, in the digital front, ETF buying in gold and silver, all of that has seen net inflows. The street does expect that going forward from here as well, you could be looking at higher highs as the market is just about broken a very, very strong psychological levels on the higher side.
Well, Manisha, looking at your historic charts, it just tells me our grandmothers were perhaps the best fund managers, weren't they? Really, they've been proven right and how. All right, with that, we have to take a very quick break. But coming up, our special segment, It's the Economy. Lata today speaks with Ashish Vaidya of DBS Bank and Mitul Kotecha of Barclays as the rupee hit a new all-time low versus the dollar last week.